Welcome back. It's the Great Australian Rate Wait. Reserve Bank Governor Phillips this week announced at a national press club address that interest rates will go up, but gave no indication on when. While financial markets penciled in 3 or 4 cash rate increases this year, Lowe said it's plausible the hike is still a year or more away. It will be the first increase in more than a decade. Let's bring in Scott Phillips from the Motley Fool. Welcome to you. Lovely to see you, Scotty. So what's the RBA waiting for here, and when do you think that rates will go up? Because, of course, Philip Lowe has said previously, oh, look, it won't be next year. It doesn't seem as if that's the case now.
Good morning. I like the rate wait line, and the question of what the RBA is waiting for is exactly the right one. They're really trying to find the very, very fine balance between putting rates up too quickly and choking off the economic recovery, or doing it too slowly and letting inflation get out of control. Now, inflation was one of those things that some economists said was dead a few years ago. But for those of us who have a little bit less hair than we used to, or maybe in my case, a lot less hair, it's a situation that we do remember from the 80s and 90s when inflation was a really big economic issue. It was a real concern because it erodes pricing power. And the RBA is trying to, as I said, strike that right balance between going too late, which would mean things get out of control, or going too early, which chokes off the recovery. Because, again, the economy is expected to really roar back to life in 2022.
Break this down for us, Scotty. Millions of us have never experienced an interest rate rise. What could that look like for the average person?
Yeah, this is where the numbers kind of get ugly and where you really need to be ready for large amounts of money. So if you think about an increase in rates, by the way, 0.1% is the official cash rate now. The RBA is saying it could go up to a neutral rate eventually of between 2.5% and 3.5%. We've said that before. Now think about adding, 0.5%, let alone 2 or 3 percentage points. You can see that a decent, on a $500,000 mortgage, which is pretty reasonable, that's about $3,700 a year if rates go up by 0.75%. Now, you talked about 4 rate rises before. You can add another one on top of that and pretty much get you to almost $7,000 when it comes to the increase in repayments. That's the concern. I don't want to freak anybody out, but I do want people to be prepared, because if and when the RBA starts moving, it's unlikely they'll stop at 1. And on a more expensive loan, again, you see those numbers go up even more quickly, unsurprisingly. And again, those are really, really big numbers, particularly that annual number. If you've got a home loan right now, if you're going to take out a home loan, you have to make sure you are prepared to pay those higher rates, because it'll come at a root shock otherwise.
Yep, we can't say we weren't warned. All right, Scotty Phillips, good to see you, as always. Thank you. Enjoy your Sunday.